Welcome to Target the Trade. This is Fed Zach, Senior Trading Strategist here at CMTrading. Today, we're going to do a trading duo. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, what's a trading duo? All right, so let's take this back a little bit. Anytime you're trading something, there is generally, not always, but generally, a counterpart to trading that asset. So, for example, today, we're looking at the Dow Jones. The Dow Jones hit all-time record highs July 17th, 2024, and we're sitting on it, okay? We're sitting on all-time record highs. Now, taking into account inflation and taking into account that the markets have appreciated tremendously, and we're kind of like an interesting market situation. Jobs right now are good in the market. However, there is some concerns that inflation hasn't completely gone away, but yet the markets still keep on going higher. So why do the markets keep on going higher? Well, there are components of the Dow Jones that keep on going higher and thereby pushing the Dow Jones. Okay, so the Dow Jones is made of many stocks, and some of those stocks are reaching all-time record highs, and that's affecting the Dow Jones. Okay, so with that said, what stocks are pushing the Dow Jones to this all-time record highs? One of them, which is the largest financial institution in the world, is called JP Morgan. Now, JP Morgan has been around since the beginning of time, and it's as American as the Fed, okay? It's as associated to the financial system, to the financial fabric of the United States as much as the Fed is. In fact, it was JP Morgan himself back in the day that set up the Federal Reserve and set up the SEC and did all that in order to make sure that the markets are regulated so that in case something does happen like what we saw in 1929, there are some responses to it from the federal government that they could inject some money into the market space and to add liquidity. And generally, that is what happens in the aftermath of what we called a bloodbath, of a crisis in the markets. And in such a situation, the Fed pumps money to the public, lowers interest rates, and allows business commerce to act more freely. Okay, with that said, okay, what am I talking about technically? All right, so here we're looking at a weekly chart of the Dow Jones. Now, this does seem, okay, like it's heading to all-time record highs. Okay, that's what it looks like. Okay, now the next one is JP Morgan. Now, I'm going to go back and I'm going to redo JP Morgan's chart, and we're going to see how similar they are. They're almost identical, okay? The only part that got hit a little bit harder was at this retracement for the JP Morgan, but they're almost identical. And the reason that they're most identical is because, like I said, JP Morgan is a large component in the Dow Jones, and it has a tremendous association with it. So with that said, which one goes higher first? Which one goes lower first? So there's a little bit of the chicken and the egg here. Okay, sometimes it's the stocks that go up higher first, and then it's the Dow Jones that catches up, and sometimes it's vice versa. There is rotation in the markets, okay? So you've got to really be on it on a daily basis to put your finger on the pulse to see which one is heading up higher faster and which one's going to play catch up. And that creates a tremendous trading opportunity, because if something is lagging behind and you see the Dow Jones is going higher, but the JP Morgan is lagging behind, it's going to play catch up. Okay, so you do still have time to jump into JP Morgan and buy it in the anticipation it's going to play some catch up to Dow Jones. Okay, and vice versa. Okay, if there's a sell-off, it's the same thing. And so these two components are really very closely associated, and we're called a positive correlation. One goes up, the other one also goes up. Okay, so those two elements, and that's how you do a trading duo. Thank you for joining us for the Target the Trade. We'll see you here next time.